DLF is a prominent player in the commercial real estate business in the Indian industry. Right now, it looks like the stock is recovering, but technically, it's sitting at a level where most people make the wrong move. So, let's understand how we should be approaching it. On the monthly chart, we can see very clearly that DLF had a massive run, all the way up to highs of around 960. That's not normal appreciation, that's a full cycle move. And what follows that kind of move is exactly what we're seeing right now. Distribution. We have your lower highs, rejection candles, and a sharp correction. As of right now, the stock currently sits at 611. Now here's the key part. This 489 level didn't just bounce randomly. It broke below a prior demand zone and then snapped back hard. That tells you one thing. Real buyers stepped in below rupees 500. This level matters because this was a previous consolidation zone before the final rally. Now let's move down to the weekly chart. This is where things get a bit clearer. From 896 down to 489. This was a 45% drop. Now the bounce from 489 to 611 may look strong, but technically it's sitting right at a weekly resistance. 611 is not a buy zone, it's a decision point. Either price breaks above 650, which means structure shifts, or it rejects and comes back lower. Now, the daily is where the trade really is. This move from 489 to 613 happened fast, and too fast. Whenever that happens, it leaves imbalance. That imbalance is sitting between 540 to 570. And in most cases, prices come back to fill that before moving higher. So instead of chasing at 611, the smarter play is to wait for that pullback. Now bring in the fundamentals. What can we see in this company? It's not a typical real estate company. It has two engines, your residential sales and your commercial rentals. And that second part is what changes the game. They have high quality office and retail assets with approximately 94% occupancy. This creates recurring rental income, which most developers don't have. At the top, the stock was pricing perfection, and the only reason it really fell was its valuation. Then that one quarter actually came with weak pre-sales and the market reacted hard. But remember, the Dahlia's project, which alone contributed massive sales, had a pause, and that's the real reason that the pre-sales fell. Now, the real fundamental strength that DLF has, other than the fact that its profit has been growing year on year, is actually that the company is net cash, and that is extremely important for the company. Zero gross debt with over 11,000 crores cash on the balance sheet. That's massive because in real estate, debt is usually the biggest risk. Here it's gone. And here comes the biggest hidden factor. DLF has over rupees 55,000 crores of unrecognized revenue that is already sold inventory. Now compare this to their peers such as Godrej and Prestige. They both have strong launches but no rental backbone, and they tend to be more cyclical. Now, DLF has a premium brand, recurring rental income, and a strong balance sheet, and that's what makes it an institutional favorite in my eyes. Now, let's understand the trade setup over here. This is a pullback trade, so we wait for price to come back to the 540 to 570 region, right? And once that happens, that is our demand zone. Then you wait for confirmation, a strong bullish daily candle. So I would actually enter the trade after the confirmation at 560 rupees. I would create a GTT order over here, firstly a single one, 560, and here I would create my buy order, and my stop loss would actually be at 470. So I would firstly create an OCO order, make it a sell order, my stop loss at 470, that gives me room for around 90 rupees. Once again 470, and my target would actually be 830 rupees. Now what that does is it gives me a 1:3 risk to reward ratio, and that in my eyes is perfect. Create my GTT, and that is how I would trade DLF. Thanks a lot.